What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with the overall markets and why the November squeeze may be starting as I'm speaking. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. So for the last couple of weeks, I was using a very cool tool known as Forecaster to kind of analyze and to look at what the market will do as time goes on. We also use this tool to look at projections based off our AI indicators that use patterns, right? Very cool pattern recognition technology to look at how the market is looking and to give us projections for many months out. So this was screaming that there would likely be some kind of pullback phase for the month of October, right? And that is what happened. If you look at SPY, for example, we went from being at $674 a share all the way down towards $646 a share. So we got this big sell-off. Forecaster was correct about that. However, the sell-off did not really last that long, did not last until the end of October. We basically sold off, bounced, came back down up until like a couple of weeks ago. And since then, the market has been starting to break out. But that's the thing about these indicators. 1 month out, this was like for the 1 month period, for the month of October, it was anticipating some downside, which is what happened. But 3 months out, the projection was always strong. And I mentioned that I was expecting a pullback in the month of October for a big rally for November and December, right? That is what we were essentially talking about. Well, what's happening is that there's a bit of an adjustment right here. The market got the sell off in October. And instead of continuing to hold down as we had like a head and shoulders like pattern that was developing, we had a left shoulder, a head, and a right shoulder. What's happening is that instead of us kind of like rejecting, losing structure, and dumping with the head and shoulders, we began to pump and we invalidated this as soon as we got the CPI report and began to break out. We invalidated this head and shoulders. And now it looks like the market is in a more aggressive squeeze phase, right? If you look at SPY and the QQQ, the same things have been happening, which implies that now we're in a more squeeze like phase, and that the overall sell off was just very short lived. And now we're already starting this November squeeze that we were looking at. So that means that the squeeze may have come a bit earlier this year than when it typically happens. So we were correct about the October sell-off. We got this big sell-off and we did see some volatility, which is what we were expecting. But all of a sudden, the last 2 days, the market hasn't validated the head and shoulders. We're breaking structure, and this could be a sign that we want to continue to squeeze, which is exactly what forecasters telling us would happen for November and December. It's just that this is about a week before November starts, so it's a little bit earlier than when this previously would happen. But overall, that does not necessarily mean that we have missed out, because there is still so much room for upside. I believe that SPY could easily surpass $700 a share by the year end. And as we play this, there is still a lot of room left for the market to squeeze. Same thing with the QQQ. We could easily try to get closer to 640 plus, if not 650. As we continue to squeeze, I will go over the levels in just a few minutes. And I'm going to break down exactly why that is. The market will likely go higher. But if we get some kind of pullbacks or, fill these gaps right here, it would just be a quick buying opportunity before we continue to squeeze for the end of the year. And the massive squeeze for November and December could be starting right now. Forecaster was telling us that November and December are known for being bullish months. Now, with that being said, what does this tell us for the future? Here's the answer. Right now, Forecaster is looking at the bullish scenario, which suggests that 3 months out, SPY could be looking for a $716 price target by December 24th, 2025, or even higher than that. That's like the more bullish case. And so far, we are looking more bullish. That implies that we could be looking for some significant upside that's left for the end of the year. If we get some kind of pullback after FOMC, a small one to come back down to fill our gaps, that will be a very good buying opportunity for us to squeeze towards December into the 716 plus area. That's going to be our average long targets based off these correlated past events. So if you want evidence about this, we're looking at these cases, right? Typically, when we get these pullbacks, we eventually see a very, very nice recovery based off the patterns on SPY and based off seasonality from the last couple of years. There's many, many years where the charts highly have strong correlations, and that's what this is using to make that assessment. On top of this, when it comes to our seasonality charts, We do have a tendency of kind of like selling off in October. We sold off with it, but now we're entering the more bullish phase, which is what tends to happen in this December/January zone. We tend to start looking bullish approaching December, and that is where we're essentially entering now. And then on top of this, when we look at like our monthly charts, we tend to be more bullish for the months of November and December. So far, the SPY chart is doing what it typically does. For the QQQ, the same thing is going on. Now we got this sell-off. See how we typically come down in this like September/October period. We came down, but instead of continuing to dump, instead of seeing the head and shoulders, we've invalidated that, and now we're in the bullish phase. What typically happens, you guys could see from last year, 5 years ago, and such, we tend to uptrend very nicely in November, and going into the end of the year, we tend to be bullish. So we're now entering that bullish phase for the triple Q, and that is a very, very good sign. Now, on top of this, I just want to add on that on the monthly time frame, we tend to be very bullish for the months of November and December, and we're now entering a very, very bullish phase. We're getting very close to it. When it comes to our projection indicator, basically what this told us is that 1 month out, or for like the month of October, there does tend to be some downside. It already happened, and it's possible the downside move is already done, and that when you go to the 3 month charts, this is like what's going to happen 3 months into the future. We're typically a lot more bullish, favoring an attempt to get for like the 640s. Our super bullish cases, even like the 670s, which is insane. But overall, we're looking very, very bullish heading into the end of this year, right? For the 630s and 640s. Not just the 640s, but basically even higher than that. The 670 area is going to be our like really bullish case. So were we bearish in October? Yes, we got the bearish move temporarily, but it did not last. And now we've transitioned to a more bullish phase, and there is so much more upside likely coming to SPY and the QQQ. Why is the market pumping? Well, there's many reasons why. As you guys know, the whole tensions between the US and China were very high, but many of the tensions are now cooling off because of a trade deal that's been established between the US and China. This is cooling off the tensions and leading to a lot of growth, especially for semiconductors, which would have been greatly affected by the tariffs. On top of this, with FOMC approaching, the market looks very optimistic for now. With FOMC, you never know what's going to happen. It's even possible the market comes down just temporarily, but overall, we're still looking more bullish because of the quantitative easing phase that Jerome Powell has been talking about. Meaning that before, right, when we borrow money, it's very expensive. It's very, very expensive to borrow money compared to what we saw during like the pandemic period in 2021, 2022, right before the Fed started to raise interest rates. Now the Fed is telling us that as long as progress continues, and it also depends on the data to some extent, but as long as things are decent, right? Because of the fact that we're seeing contractions in employment, the Fed is in a position where they're going to start easing on policy. By easing on policy, the Fed is going to likely make it cheaper to borrow money by cutting interest rates. And then simultaneously, right, they're entering a new phase in monetary policy known as quantitative easing. By doing so, the market is more optimistic. And if Jerome Powell talks more about that, that could be bullish. Now, when it comes to stocks like Tesla, I had mentioned that there would likely be some kind of pullback for the month of October for Tesla. And lo and behold, we dumped like crazy for Tesla stock. We actually went from 480 all the way down to $400. I mentioned that this was a really good buying opportunity. So we were correct about the downside for October for Tesla. Now it's forming kind of like a white coffee installed accumulation schematic, which also resembles an inverse head and shoulders, which is very bullish, meaning that we dumped, institutions are reaccumulating shares down here, and now it's going to likely continue to start running for the highs up here. So overall, Tesla does look more bullish. It could come down a bit. We're going to see if it comes back down to fill that gap or not, but overall, it is still looking more bullish. So what does this mean for the charts? What is my opinion? We're looking bullish right now, and I think that we're just getting started. There's so much more upside left on SPY. I think we easily surpass $700 by the end of the year, which opens the door for so much upside. We could still pump over 20 plus points. But with FOMC coming, there's like two main possibilities. I would like us to come back down to fill some of these gaps. You know, if we do come down just a bit to fill some gaps, it's going to be nothing more than another buying opportunity. And then we could be looking for an attempt to just rally towards the end of this year to get back up towards that 700 plus area, just like this on SPY. But getting the gap fills would be a blessing in disguise if we do end up getting some kind of rug pull thanks to earnings or because of Jerome Powell and FOMC, whatever the catalyst is. If we get some kind of dip, it's going to be a buying opportunity. And then we're looking very, very solid for the end of the year, right? We got the buying opportunity in October. There could be another one coming if we do get the sell off. If we don't get much of a sell off and the market just keeps running from here, obviously we could just day trade this. And you guys know that 2 months out before 2026 starts, we're going to likely be in the 700s for SPY most likely. So you guys know where we're going to likely be most likely. So we could use that knowledge to play the charts in front of us, and then it's going to really assist us with our day trades. That's one of the benefits of using Forecaster. When you use Forecaster, you could use this tool to understand what the market will likely do. And now we have our game plan set. We know that 3 months out, the market's going to likely be very bullish. Okay, we got the pullback. Many of us may have caught it. Some people may have missed it, but it's okay. We could still day trade this and make a lot of money on the way up. That's the very, very cool thing about using this. It's very, very versatile for day trades, scalps, long-term investments, and other things like that. So this is what SPY will likely do. I do expect us to eventually hit the 700s by the end of the year. There's plenty of room for upside. If we get some kind of pullback with FOMC or whatever the factors are, that's going to be a big buying opportunity. So keep that in mind. Remember this. But overall, our indicators now look more bullish for the year end, and the October lows may be the lows for the rest of the year, and we could be looking for more upside. On the QQQ, we look very, very bullish. Keep in mind, forecasters saying we could be running towards 670. But if you want to be conservative, we're just going to be looking like about 20 to 30 points out. So basically, what this is telling us is that by the end of the year, this is going to likely be in the 650 plus area or well above that. There's going to be a crazy upside coming. Now, before we talk about the upside, though, it is still possible that we come back down to fill some of these gaps. I would like to see us come back down to fill the gap at like 617 or even the gap back down to 611. It's very possible we return to fill some gaps first in case we get a pullback with Jerome Powell, the Fed, or other factors. And then after that, let me make it very clear, by the end of the year, we could easily see the QQQ surpass the 650s. Forecaster even talks about the bullish case of hitting 670. Either way, it's very, very bullish. And if we get some kind of pullback move, it's going to be a big buying opportunity on the triple Q. Okay, on Tesla, we look bullish. Now, there might be, in case we do see something very similar on Tesla, as you guys know, we have the gap to fill back down at 430. I would like to see us come back down to fill that gap as we're forming this accumulation. But then by the end of the year, Tesla is historically very bullish for the month of November and December. So even if we do kind of like consolidate, even if we come back down to fill that gap at 430, either way, that's a big buying opportunity because I do think Tesla runs for $500 by the end of the year. By the time we get to like the December period, we should be in the 500s, and there should be a very, very nice uptrend on Tesla stock for the next 2 months. So if we get some kind of dip, that's going to be a very good buying opportunity, and I think that there is going to be a lot of opportunity for the year end. And any major dips we get now at this point are going to be buying opportunities, so be ready for the end of the year squeeze, right? Looking at Forecaster, we have a lot of good indicators that suggest Tesla could run like crazy into the 500s. I think that 500 is going to be a more like reasonable target. If we surpass the 500s, we could continue to run. This says that even a target as high as 586 is very possible based off the historical trends, because historically we tend to see big runs in Tesla between November and January, right? That is what these trends essentially tell us. And then you could also look at like seasonality to look at Tesla like that. So you could see we tend to start really nice bull runs between November and January. So going to at least $500 a share, if not 586, is very possible. We'll just have to see how well we hold above 500. But in case we do get some kind of like sell off, in case Tesla comes back down to, come back down, in case Tesla gets some kind of rug pull to fill the gap at that 600, sorry, not the 600, the 430 area, it's going to be a big buying opportunity. November and December are historically very, very bullish months for Tesla. You can see the average returns right here. And overall, I think it's doing a great job at holding up. So overall, guys, there are going to be adjustments to be made for the markets. Forecaster was very, very correct about how we would see some kind of like downside move in October, but it's been telling us that November and December are known for being very bullish, and the big November squeeze could be starting now. We'll see just to be safe, but for now, there's a good chance it could be starting. And in case we come back down to fill our gaps, if we get any kind of like pullback move at this point, it's going to be a big buying opportunity. If we don't get much of a pullback, you could still play the charts in front of you, which is what I recommend doing. But you have the knowledge and you have the data in front of you that suggests we're going to likely see insane upside by the end of the year. So we're not even close to the top yet. There's plenty of upside left on SPY, the QQQ, and Tesla. Now you guys have a big opportunity to see what the market will do. So that's why I think it's very good to have these tools and indicators. So with that being said, guys, I want to thank you all so much for listening. Forecaster is a very awesome tool because it told us there's going to be some kind of pullback coming in October. And although the pullback was very fast, it was kind of short lived. It wasn't as big as what I was hoping for personally. But now Forecaster is telling us that, and it's been telling us the whole time, that November and December are very, very bullish months. I've been saying there's going to likely be some kind of like October dip, then a November and December squeeze. This November squeeze may be starting now, and we have so much time because there's a lot of opportunity to get these shares at cheaper prices before we see a big bull run to finish this year off. So you have an idea of where the market will most likely be by the end of the year, right? Of course, I'm saying most likely because nothing in history is 100% guaranteed, but this is what data suggests as the most likely possibility. And with this data, you can now make moves based off the charts. It's going to like help us understand, trades. It'll help us understand our scalps, our day trades, our swing trades, our investments and such. And that's the very awesome thing about using Forecaster. So, in case you're interested in signing up for Forecaster, I would recommend this tool for understanding stock analysis tools, to understand what the market will likely do, and to understand seasonality. Please check out my link down below to sign up, or use my very important links down below to save 10% on your guys' memberships. I highly recommend this tool if you guys are interested. And with that being said, I want to thank you all so much for listening. Forecaster is very awesome for this, and I believe that we're going to see this projection pan out for the next 2 months as we look very, very bullish. All right, so once again, check out my links down below to sign up for Forecaster and save 10% on your membership. I'll be back very soon with another upload. Until then, I wish you all nothing but the best, and peace out.